All right, welcome back to the Mr. Rent to Own Homes show, we're calling it, right? Since we are live. My name is Dominic Danino, aka Mr. Rent to Own Homes. And today we're going to be talking about remember that deal that you couldn't close? Well, we can save it, and we're going to give you some tips on how to basically get more leads without additional marketing spend. So, welcome everybody. I am joined today by James Brown, real estate investor and agent in the Denver market. Welcome, James.
Thank you, Dom.
Cool. So let's dive right in, right? So this is something that we constantly talk about, especially when people are new to our program and they just find out. So you do continuing education classes for agents in your market. I do presentations at different title companies and brokerages on our rent to own program. And a lot of people don't realize that this option is out there. But typically, if you've been in this business for a few years and you're tracking your leads or you have a CRM, whether it's a fancy one or a manual one, you should be able to go back through your pipeline if you're actively, working the business, right? You should be able to go back to your through your pipeline of leads of clients that were turned down for financing, and potentially resuscitate some of those leads and opens the door to have that conversation with clients about, hey, what was the reason why you couldn't get financing last time, and kind of revisit, right? Because I mean, if your preferred lender turned them down, it's kind of a hard conversation to have and just call them back again, and you kind of feel a little bit, uh, like basically either you feel like you didn't do a good job, or they feel like, well, it was your fault that they couldn't get financing and they couldn't get into a house, right? So you're kind of, you're a little bit shy about calling them again because, hey, you told me no, so why are you calling me again, right? So at least this opens the door to have that conversation again with that client, because, hey, you have something else now that you can bring to the table. Thoughts?
You said it really well.
Well, what's your approach, right? So, I mean, what's your approach? So we talked about, okay, so during your presentation, continuing education presentation, what do you typically doing, during your presentation? You bring this up, any tips that you give them and say, hey, this is how to go about it, and then talk about yours, and then I'll share some of because I covered this in my presentation, just not just talking about, who qualifies and rent to own, but like giving value back to the agents and lenders that I talk to, say, hey, how to market this, how to take this approach with your existing pipeline, because whenever you're doing something, generating leads, it costs money, either cost money or time, right? Your time is valuable. So if there's a way to generate more leads or potentially deals without any additional spend, just using what you have now, right? Then that really should be your focus before you go spending money, right?
Yeah. I think there's a lot we can dive into. Going back through your database, you could share, like I have some graphics that agents in my market in Colorado could share with potential buyers. So you can put it on Facebook groups, any kind of network type groups, and then email, text it to those clients that are actually in your database right now. But the first thing, you have to understand the different programs, like what clients are a good fit, what homes. So that's why I teach our class. So agents in our market understand what they can offer. And maybe some of those clients in your database, or maybe a lot of them won't fit, but some will. So just knowing that up front is key. So that's where getting a hold of Dom or I would be a first step. And then, another tip I've been saying in my classes if you know somebody, an agent or a lender that got out of the business recently because it's been tight, call them up. Say, hey, I send me your database. I'll work them and see if I can help them. Because those agents or lenders might have gone on got W-2 jobs or whatever they're doing now, but there could be some gold in there for you. So.
Yeah, so 2 good points, right? So we had this discussion previously about how many people have left the industry, right? How many agents have left the industry, and lenders too. And so, let's just talk about agents first, right? If you're an agent out there that's still active in the industry, you probably have a network of friends or colleagues that you work with that were agents, that were part of either your group, your office, or that that have left the industry. But those people did, if they were really working the business, they probably have a CRM or a pipeline of clients that they've talked to. And some of those probably were turned down by banks. They don't qualify for traditional financing. So there's an opportunity for you to reach out to those people that right? They're not strangers. They shouldn't be strangers. And that they've left the industry. It'd be a conversation to have with them and say, hey, what if I can work your pipeline that you had? Why don't you give that to me since you're out of the business, and maybe we can kind of work something out, right? Whether they're still licensed, I don't know. You could potentially they're just not working it, but they kept their license active, and potentially give them a referral fee of some type if you get a deal out of it. Or if they're out of the business, hey, it's a relationship thing. Look, if you're not intending on coming back to the business, that's okay. I'll work the pipeline. These clients should still be served, right? It shouldn't be hey, I'm out of the business, so you can't help these people, right? I think that's just bringing good value. If you're not intending to come back, you left the industry, and there's potentially a way to help these people, then let somebody else work those clients to see if you can help them, right? There's nothing wrong with that, right? Yep. I mean, that's just being a server, right? Yeah, bring in value to people that you probably liked, right? You got to build a relationship with them while you were helping them trying to find something. So, I mean, there's nothing wrong. It doesn't have to be a monetary value with that. Second, you brought up knowing what kind of properties are eligible, so that way we have the conversation with that person. Hey, what properties? And if you go to our playlist, I have a live playlist on one of those. We discuss what types of properties are eligible. We talked about why we don't do ugly houses, right? Or is rent to own for ugly houses? And then we talked about that. We dove deep into what kind of property. So, but that's another thing that somebody out there that's new to our live here can go through the playlist, and it's labeled what types of properties, and then also who is a fit for the program. So somebody wants to go back and watch those videos, or as we move forward, if somebody has a question, then we can address it. I want to hit up on somebody that posted a question. Says, I have a couple who due to a car accident where they were AK underwater on the total, had an attorney tell them to file Chapter 7. Okay. Wow, for a car? That's crazy, but okay. They asked if there was a way to buy a home since they have young children in the next year from now. So I guess the question would be is, do they currently own a home? Right? And if they own a home, do they want to leave that? Yeah. So if they currently own a home, then are they trying to buy up to a new home? They may have equity in the existing home. So potentially that equity could be used to get rolled into the new one through our program. So we have to get a little bit more specifics. But as it stands, right? So the derogatory credit, in this case, I'll address derogatory credit from a lender's perspective, the filing of Chapter 7, right? So traditional financing is not going to let them get financing. FHA won't right away, right? FHA or conventional, they're going to need seasoning time for that to age for them to qualify for traditional financing. Now, the question is it they filed for Chapter 7, and let's say they had a car loan, and whether it was repoed or they gave it back, and then there was a shortage on the payoff. So there's potentially a charge off of the $8,000 that it was underwater. Did they discharge the rest of their consumer credit? Because if it was just a car loan, okay, it's easier to kind of explain. But let's say they had other credit cards. Did they discharge the credit cards too, or did they continue making the payments on those credit cards? Because based on this this example, the only issue apparently was the underwater on the car. So I mean, that doesn't mean they should let go of their other consumer debt. They should be able to continue making that payment, right? So whatever was arranged. So specific to that situation, yes, we could help somebody like that, right? So because what we're going to do is we're going to let that BK season, and then give them time to get into the new home. Once that Chapter 7 is old enough to get conventional or FHA financing, then they would apply to get their new financing and basically kind of basically pay us off, get us out of the transaction, and then go about their merry way, and hopefully it doesn't happen to them again. Anything you want to add there?
I'm assuming they don't have a house. They just want a new one. Maybe it's first time home buyer.
Yeah, either way it would work. Either way it would work, right?
Yeah, but they've got to have some money up front.
They're a first time home buyer. Yeah, first time home buyer. Yeah.
Did they
so let's address that, right? So if they didn't have the money for it underwater, so it was totaled. So car accident, car was totaled. The insurance company probably didn't give them enough to pay off the balance, right? So there's a shortage there. So they're like, okay, forget it. We're not coming out of pocket for that, right? So, but for our program, they are going to require skin in the game. The question is, if they didn't have the $8,000 for the shortage and they were willing to save their credit, let's say I had $100,000 in the bank, and I had that situation where my car was totaled. My insurance company only gave me $5,000, but I owed $13,000 to the bank. If I had $100,000 in the bank, I don't know about you, but if I had it to save my credit, would I just come out of pocket and say, okay, here's the difference, get it out of here, and I start all over again and not ruin my credit and not have to file Chapter 7? Potentially, right? So somebody that's giving that up and say, hey, I'm not coming out of pocket, I'm not going to pay it, or whether they have the money or not, generally that's going to give me an indication that probably they don't have the money, right? So, if they don't have the money, then they are looking for somebody that gives them either a down payment assistance program, right? So they're not going to qualify for a down payment assistance program with the Chapter 7, because those programs generally require people that have decent credit, and they're going to have to meet probably more like FHA guidelines also, right? So for our rent-to-own program, somebody has to have skin in the game. So we do require a down payment. So if they have a down payment, or they can get a down payment. So sometimes people think, well, what is it I have in my checking account? Yeah, okay, so maybe you don't have all the money in your checking account accessible right now, but people have 401ks, people have retirement accounts that they can access to buy a home, right? People can also get a gift from family members. Eligible family members can be gifters for somebody to purchase a home, and that's an eligible down payment source for traditional financing as well, including our program. So that is what's required for our program, because we want people that are going to have skin in the game, that aren't just going to walk away. Our program is rent to own, not rent to rent, right? The goal should be are you committed to getting your own financing in a year or 2 or 3? So because of that, you're going to have to do a little bit of work, whether it's waiting for the BK to fall off, or if it's a derogatory item that just needs seasoning, or documenting your income because you're self-employed and you haven't reported you haven't done your taxes, or you're writing off a lot, you're a business owner. So whatever's keeping you from qualifying, we're going to give you time to do that, right? But it does require skin in the game to buy the property, because we're stepping in as the buyer in that instance, right? So our goal isn't to keep a house just because you walk away. we want people that are committed to getting to the finish line.
100%.
All right. So next question. So in the next question here is, I have a customer who totaled their car. We're upside down. So this is that scenario probably. So without gap, and then they file BK. The attorneys advise they're hoping to buy a home in the next year due to having small children. Right.
I think Tracy just rephrased that and put her name in there because it came up blank.
But this is the scenario we just talked about, right? So yeah, potentially they could. They're probably not going to qualify for traditional financing, but they are going to need money. So that's the question, right? That's the question. Now, well, let's see. So they are first-time home buyers. Then it says it was total. Okay, so that makes sense. So the insurance company didn't pay them enough. And then the last question: how much is your down payment? A percentage, or depending on the price of the property? Right. So you want to address that?
Yeah, I mean, ideally they've got around 10% or more of the purchase price. We've got some flexibility on that. When we have properties in inventory, we'll go as low as like 10 grand. But that's kind of a very infrequent case where we'd actually have inventory. So just basic guidelines, 10% of the purchase price, which
if we're going to step in and buy a house off the MLS, a move-in ready house, right? We're going to need at least 10% down, right? Now, here's the kicker, right? Here's the kicker, right? Obviously, what can they afford? I usually tell people, say, what is it that you can afford, right? Because I can tell you 10%, but if you have more, and obviously, just like any financing, the more you put down, the better your payment is going to be, right? It's just as simple, right? So if it's a $500,000 house, you put 10% down, but whatever that payment equates to, you can't afford it, but you have additional funds, then which one are you going to do, right? You should be putting more down to lower your payment, right? So I know easily most people say, hey, what's the minimum? What's the minimum? It's like, well, don't look at it from the minute. What is the max you could put down, or what do you have access to? So that way we can create the transaction and structure it so that way the payment is comfortable to you, right? Because you could put the minimum down, but if the payment isn't comfortable to you, then we're not going to put you in this house, right? We're still going to ask you, how are you going to make this payment, right? It isn't just, okay, here's a house, good luck, right? How are you going to make the payment? Can you afford the payment? What is your income source? What is your situation there, right? Your employment history. No, when you're required to go get exit financing, how are we going to document that income? That may not be documentable today, but we have to have a plan so that way, yes, when you go to one of the big box lenders or one of our lender referral sources and say, hey, they're going to ask this and this. Do you have it now? Or are we able to get it and get that cleaned up so that way in a year, 18 months, 2 years, 24 months, so that'll be available so that way you can get financing. So, so the minimum to even open the conversation for us is 10%.
Yeah.
Right. So we need somebody that's going to have skin in the game. They're committed. They want the house, right? This is not a rent to rent program, right? So this isn't, because we're giving you the opportunity to pick the house, right? I generally don't carry inventory, right? So it isn't like I got these 3 houses, you get to pick one of the 3 and then that's that, right? So there are other programs out there that have an inventory and then you get to pick them. And sometimes because of that reason, they'll allow people to put in the minimal amount, 10,000, 15,000, 3%, 5%, whatever that may be. And that's okay. That's their program. That's not how we run ours. Their program is the minimum, or their program is a little bit, because in reality, those other companies are hoping that somebody doesn't follow through and get their financing and acquire and complete the processes. And they're hoping that they just walk away. We're not hoping that they walk away. We want them to get the house. So we want to set them up to succeed, not to fail, right? So if putting the minimum doesn't help them because the payment isn't affordable, or they wouldn't be able to qualify for that payment where they got the loan anyways, right? If let's say the payment was $2,500 and their income is $2,500, well, there's no lender that's going to give them a loan, right, for that loan amount if the payment is going to be $2,500 and they only make $2,500 a month. So,
Yeah.
so those are the factors that we take into consideration when we are basically considering somebody for the program. And in reality, not everybody's a fit. I tell people, it's like, this may be a fit, this may not be a fit, right? What is your situation? And we try to customize it to each individual situation, right? So knowing the story, what's happening, why did it happen? Okay, what is the rest of your situation? Just like a lender would, right? I take the lender's approach, just like a lender would, right? It's like, I'm going to give you my money. I'm going to make sure that you can pay me back, right? Yeah. I got to document that, right? Because if there's a situation where we have to basically evict them or remove them out of the house because they haven't made the payment, then we're going to have to go through a process that shows that we documented how we came upon that payment, or how we explained it to them, or, did we really qualify them? Did we put somebody in a situation to fail, right? That's what the way that it's approached these days. Did you put somebody in the situation to fail and you were just trying to take their down payment? Or did you actually do the legwork that's required to make sure, hey, yep, they could afford it, they can make the payments, they just chose not to, right?
Yeah.
So
that's a good question. I got two things to add to that too. So there's always a balance between how much they pay up front, their rental amount, the purchase price in the future. Those are kind of three main things. And then their whole story. Why can't they get a loan? And some of the programs, we can work with them as well, are pretty strict on where the houses are, price range, credit scores, job history. It can kind of be rigid, but they have a low amount down. We're getting a higher amount down typically, and we could be a little more flexible on those things. But, we look at it holistically, and like Dom said, we're wanting to set them up for success from the beginning. So there's all those variables. The other point I wanted to make too is one of the reasons that I really like 10% as a minimum is that when they go to get their loan in the future, it could be tomorrow. They've already got an amount ready to use because they get 100% of that money they pay up front to use for their down payment and closing costs. So if they go get a 3.5% down FHA loan or a 5% down conventional, they've got that sitting there for them to use down the road. They're not going to have to save up over time. So some programs, say rent's $2,000, they'll charge an extra couple $100 a month, kind of a forced savings plan. That extra 200 is being put away, so they're building up this amount that they can use for their down payment and closing costs. They call that rent credits. There's a lot of confusion over that, but anyway, that's the reason we like 10%. For one, it's non-refundable and it's protection for us. But
yeah, that's a great point. Yeah, that's a great point you bring up, right? Because at the time that they get their financing, the buyer is getting credit for the down payment towards the price of the property. So most lenders will give them credit for that as towards their down payment already that they're required to make to get their either FHA or conventional financing. So typically they don't have to come out of pocket with any additional funds. Now, if they've accumulated additional funds and they want to finance less, then that's okay. That's between them and their lender, and say, hey, yeah, I'm just going to bring more money because I want my balance to be lower because I want to have a smaller payment or a shorter term, right? I want to pay this off a lot faster. That's okay, right? But typically, if you're putting at least 10% down, that basically ends up covering your down payment when you get your own financing, and a lot of times it covers your closing costs too. Yep. So you end up basically coming to closing with minimal. The only thing you probably have to pay with your lender at that point in time, when you get your own financing, is probably the appraisal, your credit report, maybe an inspection at the time, or whatever else that the lender may require. But typically, it could be structured to where you come in with no money out of pocket at the time that you exit the transaction. So yeah,
Yep.
Great point.
Yep. Good question, Tracy. Thanks. It's awesome.
Yeah, appreciate it, Tracy. Thanks for joining us.
Yeah. Yeah. If you got any other questions about that stuff, let us know for sure.
All right, on to well, we'll continue back on the same topic, and on more ways that people can find deals that they weren't able to close because the lender said no, right? So we talked about people going through their pipelines, through their CRMs, or however you're doing your campaigns that you're using. How to reach out to those clients again and touch base with them and see what their situation is now, to see if you can help them. Reaching out to other agents that have left the industry, right? They have people in their pipelines that were turned down. They could potentially be a fit for this. Okay, the next one I want to talk about is, I know you're in a lot of Facebook groups. I'm in quite a few Facebook groups myself, right? So I know agents out there are in a bunch of Facebook groups, or let me rephrase that, not just random Facebook groups like, how to make better spaghetti Facebook group, more like other agent Facebook groups, right? So if you're part of either, some of the different brokerages, EXP, Coldwell Banker, or any of the other ones, right? They have their own Facebook groups. They have, agents in Denver Facebook group, agents in Phoenix Facebook group, right? So there are a ton of Facebook groups out there.
Yeah. Garage sale groups.
What's that?
Garage sale groups, all those neighborhood ones. I know a lot of agents create their own as a way to farm, right?
Yeah. So two different points right there. So ones that are agent specific Facebook groups where you could work with other agents and say, hey, I know about a rent to own program for people that can't qualify for traditional financing. Reach out to me and let's work together, right? That's free leads, right? You should be relationship building. Two, potentially there could be some clients in there. It's like, whoa, some agents themselves could be in there and say, hey, I want to buy a house, but I can't qualify because I'm self-employed, right? I'm 1099. I write off everything.
We've done
potentially
that.
They could be a lead. Yep.
We've helped other agents good, yeah.
And then all the other Facebook groups out there where people say, hey, I want to buy a house, or I want a house, but I got turned down. Or I know agents out there in different groups, they post, hey, I have this listing, right? This listing for sale, or I'm an agent. If you're looking to buy, sell, or invest, is the phrase these days that I see a ton. But what's happening there as agents, it's everybody else is posting that, right? How are you differentiating yourself from that, right? Like every Joe Schmo agent is saying, if you're looking to buy, sell, or invest, right? Say, okay, yeah, whatever, right? So clients get tired of that. It's like, oh yeah, so you're just another agent. The question is, how are you going to differentiate yourself, because these other agents aren't offering what you could potentially offer here?
Totally. And you could run ads.
You could run ads. Absolutely, right? So, but to me, those are the free ways to source leads, right? We talked about, so your pipeline, other agents' pipeline that are no longer in the business, or work with other agents to be the go-to person in your office and say, hey, I know this rent-to-own program. I know how it works. If you're interested, let me know. I'll work your dead leads. If you don't want to work those dead leads, that's okay. Give them to me. And if I get something out of it, we can kind of work out a deal, right? Agent to agent. And then different Facebook groups, right? Yep. Either agent-specific Facebook groups or you talked about the buy, sell Facebook groups. Some Facebook groups may not let you post. That's obviously the Facebook group's administrator, whatever the rules are with that, right? As it relates to spamming, but I'm pretty sure there's a ton of groups that people post in that say, hey, I have this listing, or hey, I have this property for rent, or hey, I have I got an Airbnb, or I'm looking fixer upper houses, or whatever it may be. So there's a ton of Facebook groups out there that will let you not spam, because I don't believe that this is spamming, right? It's not spamming. To me, it's offering a product that nobody else is offering.
Yeah.
Right.
Yeah. And if you're an agent, reach out to your favorite lender. Say, hey, can you send this out to your turn downs? Same thing if you're a lender. Send it out to all your favorite agents. Say, hey, hit up your direct contacts. Kind of go back and forth, create some awareness back and forth between lenders and agents.
Yeah, it's relationship building, right? Thinking a little bit outside the box, right? So definitely, there's more ways to skin the cat, as I say, right? So we're having people think a little bit differently about their approach because of the times that we're in, right? Transactions are down, and agents are looking for business. Agents are leaving the industry because they don't have enough business. So yeah, you have to get creative, think a little bit outside the box, open your mind to other possibilities. Right? I know people get caught up in the traditional way of doing things, but here's an opportunity to stand out, differentiate yourself from the competition, and be the go-to person.
Yep.
Right. So yeah, it's definitely something to apply to your business, and then an additional tool to your tool belt, right? Maybe you're doing other things as well, but definitely this is an option. Anything else you want to add there?
Well, you may have mentioned it. I got distracted for a sec. If you have a listing and it is a good fit, did you already mention that?
No, go ahead.
Yeah. So this is what I do when I have listings. I'll check all the boxes for seller finance, lease to own. If the property fits a good rent to own property, which, as we've talked in other shows, it's basically cookie cutter homes, 3-bedroom, 4-bedroom, 2-3 bath, median price range in metro areas. If it fits that, and you might just call us and see if it's a fit if your listing's a fit for rent to own, you can check those boxes as the financing options beyond the FHA and VA conventional options. And then you might be able to attract some buyers that can't get traditional financing that would want and need to do rent to own, and we could step in and buy that listing from you. So it does a couple things, like you're opening up to more potential buyers. That's kind of a value add too, to tell your listing clients, because you're bringing more buyers than you normally could. And the other benefit is, like, we're coming in with at least 20% down, so we're a stronger buyer than, say, an FHA or VA buyer when we buy it in the first part of the transaction. So did I miss anything there, Dom?
No, great points, right? So using your listing as a lead magnet, in the sense, right? Because your seller, if you have a listing, your seller may not be offering seller financing or kinds of terms, but if somebody's interested in that property that needs or is looking for some type of terms or seller financing, or a creative option, then we could potentially step in as the buyer for that listing. You, as the listing agent, get your commission just like any other sale, right? It just happens to be that we become the buyer in that transaction, right? So you like you said, you're opening up for more potential buyers, and then potentially it could be other leads for you as the agent also, right? Yep. Because that person that reaches out could have seen the Zillow posting or Redfin or Realtor.com or Trulia, or wherever they found it, right? And may not be working with an agent, right?
Yep.
So clearly they're interested in buying a house. So there's an opportunity to work with somebody. It's like, hey, so you're looking to buy a house, right? These are people that are kind of raising their hand and saying, hey, I want to buy a house. if they're reaching out, they're interested, and then at least be able the opportunity to have a conversation. Maybe they don't need rent to own. Maybe they just think they need it, and they should get pre-qualified or go through that process. That's going to, just as you would any client that reaches out to you, right? It's like, okay, yeah, sure. Have you been pre-qualified by a lender? Maybe they have, maybe they haven't, right? And get the story, and potentially that becomes a lead source for you because you posted your listing as, and in your market, what does that look like, right? So here, if the property is being offered for, so in the seller's, what is it? The financing section of the listing in the MLS, right? There's cash, FHA, VA, conventional. There's going to be additional buttons to click on, so that way it shows up on the listing. So you may see seller financing, seller may carry, lease option, lease purchase. What other term that I've seen on there? I think that's about it. Those are the main ones that you may see, and they may vary from market to market, right?
They do, yeah.
So you could potentially put that out there and draw potentially more buyers for your listing,
Yeah.
especially right now that the listing days are going up, right? They've been increasing. I know here they've been increasing, so properties aren't moving as quickly as possible. So you want to open up your property for more potential buyers.
Yep.
Cool. Well, anything else? Any last closing thoughts?
I think we covered a good portion.
Yeah, I think we covered a lot, right?
Yeah.
And then we were able to address Tracy's question. So thank you, Tracy, for answering your question about your scenario. And hopefully in the future, as we're going to continue doing more of these, people will have questions about their scenarios and we can address them. And then we will be talking about different clients that we were able to help and talk about their scenarios and what was keeping them from getting financing and how we were able to kind of solve that problem. Cool. All right. So if anybody wants to get a hold of you, James, how can they do that?
Go to Linktree/partner with James Brown.
All right. And if you want to get a hold of me, you can go to Mr. Rent to Own Homes on Instagram, or clearly I'm on YouTube as well, Mr. Rent to Own Homes. And then on TikTok, Mr. Rent to Own Homes as well. Or you can go to our website, ownhomes.us.com. It's on the banner right up top next to the StreamYard logo. So our logo is there. That's our website. Find out how our program works. Watch the little video in there. We have an explainer video on the main page, kind of walks through the process. And if you're interested, you could put in your information on there and we'll get a notification and we'll reach out to you or contact us directly through DM and so forth. And then we'll kind of reach out and connect and talk about your scenario, whether you're an agent, a lender, or a potential, client or customer that isn't working with an agent or a lender right now. All right. Well, that's it. Thanks again, everybody. Until next time, my name is Dominic Danino, aka Mr. Rent to Own Homes. We'll see you next time. Bye-bye.